Hello, everyone. This is Tom Fox, and we have a long overdue podcast today. And you're going to have great fun and learn a lot because I'm thrilled to have, finally, all because of me, Peter Schablik. Peter, first of all, welcome and thank you so much for taking the time to visit with me today.
Thank you very much for inviting me. I really enjoy your podcast. It's such an important topic in today's world. There's so much going on, and it's very relevant for everything that's happening in today's world.
Peter, could we start off by you telling our audience about your professional background?
Sure. My name is Peter Schablik. I'm a former partner in risk consulting. I was with Arthur Andersen, Grant Thornton, Mazars, and most recently with FTI Consulting, a combination of IT, audit, and consulting. I originally started in Andersen Consulting in the late 80s. And in the early 90s, when the COSO framework came out, the SAS 70 for third-party reporting and the Fiducia for banking came out, there was a need for more technology experience in banking and in audit, rather, and not just banking, but audit. And I did a number of reviews, and I was asked to transfer to the audit division. And the office managing partner of Arthur Andersen at the time, he said, listen, you should do this. There's a lot of other consulting senior managers. This is your best path to making partner. So what I did, I actually transferred from consulting to audit. And I've been very fortunate. I'll be honest with you. With Andersen, I was able to experience thousands of clients, literally, some of them only maybe half a day here or there, reviewing controls. But I've got banks, manufacturing, energy, including nuclear, defense industry, textile, and printing. Really great experience in my background. Like I said, about 35 years of experience.
Peter, one of the things that intrigued me about one of the articles you've written in your career really is you tie together themes of fraud detection, investigative thinking, and strategic fraud mitigation. I was wondering if you could say a few words about why having those, I don't want to call them cross disciplines, but those maybe three focuses are so critical to fraud risk management for corporations.
I think having different experiences and bringing them all together is real value. I think a lot of the work I've done in public accounting has been focused on checklists in terms of when we do an audit, SAS 99 or other checklist, right? And I think oftentimes the checklists are given to junior staff. I don't want to be too critical, and they're really thinking about what could go wrong. But having experience and understanding and being experienced in different frauds and things, you can look at. You really need to have some critical thinking and say what could go wrong, what could happen, knowing this industry, this business, the players, the tone at the top. I think there's a couple of misconceptions I wanted to run by you, see what your thoughts are too. Tom, you may have thoughts on this as well. But I've had a lot of clients where they say, we haven't had any fraud, so our controls must be good. Oh, really confusing luck with controls. And actually, it's just the opposite. If a company has had a fraud, their controls are probably better because they've dealt with it, they've revised their controls. It's actually the opposite of what I typically hear. The other misconceptions or frauds committed by unsophisticated people looking for a quick hit. Those aren't the real players. The real ones, the real ones are the ones that really know what they're doing. They know how to game the system, and they do this over the long term. And I don't want to sound like I'm admiring these people, but they're not idiots. They're people that really have thought things through and done things. And I've seen things in a lot of different industries that are really somewhat amazing what they've done. I hate to say that. Again, fraud checklists. When you're talking about an external auditor, fraud is not really front and center of doing an external audit. An auditor has to report any cases of fraud or any control weaknesses in a management letter. But this concept that you had an audit and they did a fraud checklist so we don't have any frauds, that's really stretching it. That's not really the intention. It doesn't mean you don't have a fraud. It doesn't mean maybe you don't have a financial reporting significant weaknesses or material weaknesses, all it means. The other thing, and I'll give you an example later, is because I work a lot in technology, a lot of people say technology is really not, there's no frauds in technology. I'll give you a couple of examples in this podcast, if you allow me.
You bet.
If you want to keep going on, most of my experience really has been accidentally finding a fraud. It hasn't been to find a fraud. It's we back into something. We find something through an audit or controls engagement. One example was on the West Coast. I spent 5 years on the West Coast. One of my clients was a high-tech startup, and they had six founders of this company. One was HR, and they were getting ready to go public. A lot of my experience in Sarbanes-Oxley, preparing companies to go public. And this person in HR was both responsible for boarding people and also part-time employees and approving time and expenses, if you will. And we said, no, it's not acceptable from a control perspective. It has to be separated. So we separated, and we found out a few weeks later that this person had created fictitious people and had paid themselves. And I didn't know this at the time. I don't know if this is still the case. I haven't checked into this, but through the payroll system, you can have two people with the same social security number, two different names, have the same address, have the money sent, and from a tax withholding perspective, it was correct, but I just couldn't believe it. But a lot of this, again, we as you talk about how important controls are in your podcast, it's critical. Virtually every one of my clients I've had has had a fraud, or will have a fraud at some level, or a fraud attempt. Maybe I should say a fraud attempt, if not a full fraud. It's so pervasive, and that's why it's so important to look at this.
So, what are some of the more common forms of fraud you've come across? And the thing about the list is, it struck me as many of them involve either failure or override of internal
Yeah,
controls.
that's right. Management override tends to be the number one. The management override and home at the top, from my perspective. One of the benefits of Sarbanes-Oxley, before Sarbanes-Oxley, if the CFO, CEO came to somebody and said, listen, board this vendor, pay this bill, but do it. It will take twice. Now, you've got a reason to question things now. It's not just a question of management influence, but management override, creating vendors, creating payment. I've seen it in high-tech startups. I've seen it in mortgage banking. I've seen it in other industries, management override. Management override of IT controls, management override of payroll controls. That's one. There was an awful lot of email abuse. I had a client a couple years ago, couldn't believe it, a bank. They created a system to approve wire transfers via email. Are you kidding me? Of course, somebody broke in and created a fictitious email and tried to get a wire, but it was caught. Expense abuse. I've seen many cases of expense abuse. I'll tell you one example is, a company had a decentralized expense processing, and the person submitted accurate expenses. Problem is they submitted at two different locations at the same time, and were reimbursed twice for the same expenses. Financial performance, enhancing financial performance. Third party and vendor kickbacks is, especially in certain industries, like I've food service. I've seen a lot of that. Vendor kickbacks, vendor. It depends on the industry as well, where you see what's common versus uncommon.
So, how do some of the more recent, or what are some of the technological strategies is the wrong word, frauds you've seen perpetrated to override these controls?
What controls we should put in place? You mean, or
What
what has happened?
what has happened?
So a startup, for example, one of the founders is private equity money comes in. One of the founders doesn't feel they're getting their fair share. It goes back to the fraud triad of I have an opportunity, I have a justification, means to do it, and they create a fictitious vendor, or they create a related party to create a company, and they transfer funds. That's one I've seen over and over again in the industry. That kind of fraud. The expenses, again, it's different things, different industries. I'm not going to. What's common in one industry is very different in another industry. Regulated industries tend to have the basics tend not to be in place. They tend to not have the excuse me, simpler frauds. It's more the more complex frauds. But like manufacturing, obviously payments, kickbacks, a lot of different things like that.
And that really, you actually started to answer the next question I wanted to pose, which was patterns of frauds manifesting across different industries. Are there some consistent things you've seen across either third parties, cash businesses, food service, entertainment, et cetera?
Food service, food distribution, like I said, the kickbacks, vendors. The vendor wants to get their better place better place in the store. Give you tickets to a game, Super Bowl game, or a playoff game. I've seen that. I've seen other types of food service fraud, bidding. It's called diverting in food service, diverting frauds, where you give a preferential price to one. You don't take the lowest price. You give preferential price to one. I've seen that in food service industry. Skiing was an interesting one. The older ski resorts, the newer ones like Vail, their systems are so disintegrated not integrated, I should say, not disintegrated. Sorry, that they don't know what one system is doing. So many ski resorts keep track of vendor skier day sales. So if all of a sudden at one station the number of skiers, the revenue goes down, they know they're getting a fraud. There's no foolproof way in the ski industry for the older ski resorts specifically. I have a number of examples I wanted to go over with you. I don't know if you want me to go over that now.
Sure.
One of the article I wrote has a number of frauds, and I can give you a little more information on some of them. One of the biggest ones, which is it combines two things I didn't want to talk about. One is people think technology is not really doesn't occur. Fraud doesn't occur in technology, and the other thing is we've all talked about Sarbanes-Oxley and how much it's cost and all the overhead, but there are some benefits to Sarbanes-Oxley. I want to talk about that. This is an example. When I was a senior manager in accounting, right? I was in the accounting division. There was another senior manager who did bank audits. I would come in and do the IT and controls portion, right? We were both told we had to wait 2 years to become partner. He said, "I'm not going to wait. I'm not going to wait 2 years." He said, he took a job at a bank he audited. No, when the cooling off period, this is an example of why I think the cooling off period, it makes sense. The cooling off 1 year period. He took a position as a CFO of a bank, and he also and he used to audit that bank. And the audit manager who replaced him, used to work for him. And when she came in, he told him exactly what to audit. So what he did was they had a system conversion. Okay, this is probably hard to believe. And when you do a system conversion, you have fixed asset build up. It was a 4 or 5 year write off, 4 or 5 year depreciation of those expenses, right? It's not a 1 year hit. So what he did was he overpurchased servers, printers, computers, and he went to the vendors and returned the equipment and said, please put a credit on just make it easy, put a personal credit on my credit card. You don't have to contact the bank. Let's make it simple for you. To the tune of $600,000. And that's public. I'll send you the link if you like. The article's out there. And another one example of that was a mortgage bank client on the West Coast. When they did the audit, they were very lax about giving us audit evidence, and I was very suspicious of this individual. Turns out, a few months later, we found out he was operating a computer service business out of the data center. He was buying equipment, selling equipment, hiring people. They were answering the phones. If you can believe that, we've had an adhesives manufacturer. It was in the article. The adhesives manufacturer was sold. The owner did very well, but the senior management didn't do very well. But in the adhesive business, it's a unique type of manufacturing business. We have formulas, and batch formulas have to equal 100%. Well, when the new owners came in, none of the formulas equaled 100%. And list of prospects, the database was missing. So that's just a few. I could go on and others if you like to, or you like to move on to the next topic.
The first time I became a general counsel, the CEO had actually grown up in internal audit and had
Oh, wow.
gone to this company CEO. And so he liked to tell stories, of course, being an internal auditor. But one of his key lessons for me was that he said it's segregation of duties,
Yeah,
segregation of duties,
exactly.
segregation of duties. He said, I don't care how big you are, or how small you are. If you're 4 people, segregate the duties. If you're 2 people, segregate the duties. If you're
Yeah.
200,000, segregate the duties. I wonder what your thoughts on that might be. And then whatever they are, if you could explain really the importance of that basic control.
Yeah, I think what I listed was in the outline here was five key areas, and segregation duties is one of them. We're not letting one person initiate, approve, execute, and review or account for a transaction. That's critical. Separate that. You can't conceal. You can't conceal the fraud. You either have at least preventive controls or detective. If you're a small business and you can't separate those functions, at least have somebody review that and make sure there's a review process afterwards. That's absolutely critical. The other thing, Tom, you talked about in your podcast rather, startup companies, new companies should have controls. That's one of the controls they should put in right away. Partly because it's so pervasive. The other thing is it doesn't get any easier to do it later. If you do it later, it's much more work, much more time, much more impactful to the organization. It's something you should put in right away. Segregation of duties. The other line, and when I typically think of segregation of duties, I usually think of the technology piece. What goes along with that is delegation of authority. Who has what privileges, what rights to commit the company to this dollar amount? What are the limits? What are the authorities? That's an important document. That's more. It's not technology. That's more business wise, if you will. Delegation of authority. The other things I just want to be honest with you, tell you about tone at the top. Okay, these rules, these policies, they apply to everybody. Okay, in the company I was with, FCI and the others, the CEO, everybody has to comply with the policies. I've had clients where we're not going to ask the CEO to do that, and they say why? We can't have them do that. For example, changing the password in their email. We can't ask the CEO to change why? But it's not just a question of the CEO's email, and obviously somebody hacks in the CEO's email, they could do something. It's the message it sends. The controls aren't important. We're exempt. It's not that important. Otherwise, I would comply with it. So I think that's the tone of the top is critical. And I've seen that in many cases where people at the top really focus on controls. They believe in this. And others where, we'll worry about it later. It's not a big deal. It's something we have to do. It's a checklist. Something we have to do to appease the auditors. That's a much different perspective. I think hotlines are really important with no retribution. Is there an outlet if somebody sees something wrong? Reporting this, having no retribution, going right to the audit committee or some other third party that's not. And then third party fraud risk assessments, evaluating third parties is critical. I spent a lot of my career in SAS 70, which now is a SOC reports, SOC 1, SOC 2, SOC 3. And third party is a big source of risks in today's environment. How do we, especially as companies outsource more and more of their core, what are we putting at risk? What do we need to do? And there's a lot of, and I give you a lot of examples of companies outsource, they just drop all controls. One of the things I want to say briefly is A lot of times the work I do, even though I do work in cyber, I do work in IT, I do work in a lot of specific industries, it often comes down to the basics. It's like in sports, football, blocking and tackling, right? Do you have this? If you don't do that, everything else kind of falls apart. And physical security, if you could believe it, has been a hot topic. I've had clients where we have physical security, we have key fobs, and I say, okay, who has the key fob? Anybody. Who controls it? It's off to some person. In the worst case, I've had drawers full of key fobs for guests, and one bank that was going under a regulatory review, they had to fly the vendor in to reset them system because nobody knew who controlled the system, nobody knew how many key fobs. So just having a key fob, I've seen that. And the other thing about key fobs, as crazy as it sounds, I've been to many multi-million-dollar data centers. Oh, we're secure. We have this. And one of the things we do as an audit, as I do, is I go to like a receptionist, say, "Can I borrow your key fob?" Go to the data center, click, the door opens. So is it some of the things sounds crazy, but it's often that I've seen these recently in terms of some of the basics. Just some of the basics are because again, people like to talk about cyber and these high level risks. But what about the basics? What about things they should do right away?
Peter, I'd like to turn to a little more focus on your article, Want to
Yes.
Catch a Fraudster, Think Like a Cop, and specifically some areas around investigations or investigative strategies. And here I'm going to make the leap that anyone doing an investigation has a handle on the documents and they have a handle on the numbers. But I really would like to get what seems to me to separate good investigators from really great ones is the great ones have real instincts that they've
Yes.
developed and they understand behavioral cues. They understand many times people want to tell a story, you just have to tease it out of them. Could you
Right.
say a few words about sort of that part of your investigative career and why that those skills are so important for a fraud risk investigator?
I think it's very important to understand your audience, who you're working with. If you got people that are very open and want to work with you and tell you don't hold back, that's a lot different than people who only tell you answer your question only. They won't give you any more information. I think you can sense that is one of the things. I think thinking out of the box, don't just go by a checklist, but what could happen? What could happen? In some cases, excuse me, we do a fraud investigation. There's no fraud. It's more of a risk assessment, right? In some cases, there is an actual fraud. When they're in either case, understanding the business, doing what we call process decomposition, understanding all the different steps and all the different tasks and all the sign-offs is important. Looking at data, that's a big thing right now. Data, looking at data. When in the days when I was early doing this, I would look at data and try to find anomalies. What looks different? In today's world, it's AI. AI, look at the data, can look at it 1,000 different ways in a minute and tell you where there's unusual items in here. But again, in terms of fraud, it's understanding your audience. And one of the challenges I found personally is doing this remotely. It's different than doing it in person. In person, you can tell a lot by how people react. The nonverbal cues sometimes they're harder to do remotely than in person. But again, understanding the client, understanding their involvement. When I was one of my previous firms, we had an economic advisory division, and they were all ex-FBI agents that worked there. And working with them is really incredible. They know exactly how to answer the questions. They can tie three different interviews together and say, these are the inconsistencies among these three people. And therefore, and literally, I was at one client. They said, this person said this person said this person said that. Therefore, we know that the IT director and his assistant are having an affair. I said, how did you get to that? And they went through everything in detail. And as some of them, that's a whole science, and that's not my expertise. But a lot of the ex-FBI agents that work in this industry are incredible in terms of what they can do.
So, how about some maybe takeaways or lessons learned that we could give the compliance professional, the fraud risk professional, or even the business executive listening to this podcast about your advice for how an organization can strengthen their fraud prevention program? And I'm going to even say what you're about to say will strengthen your compliance program.
Sure. I think, and I'm not doing this to sell business, but I really believe this. Conduct a third-party risk assessment. You could do it in risk assessment on yourself. The problem is there's so much bias when companies doing their own, and it always ends at the bottom of the pile. If you say you should do a risk assessment, we've done this many clients we did audits. We say you should do a risk assessment. Yeah, we'll do it internally, and we'll do it maybe next year. It drops to the bottom of the pile, if you will. So I think having a third party do it, and I'm not saying have a major project, but even a high level project is so eye opening because a lot of companies they don't think about this. That's not their focus. Their focus is on growth, on cost, on customer service, on whatever makes the business go. Fraud isn't not their bailiwick. Also, what's happened to our peers? I think the best companies in terms of fraud, what happens to our peers? What happens to our industry? What could it happen to us? What are we doing to make sure that doesn't happen? That's a big thing. Like I just did one for a project with a private equity firm, and they were all over what the competitors, what was happening with them in the industry, what frauds occurred, what other things. I think that's a big thing. And also, is this a differentiation for our business? Many of my clients in the past, we've had SOC 2 reports. We've helped them get SOC 2 reports, but it's not necessarily a fraud, but it does opine on their controls over privacy, confidentiality, security, availability, and processing integrity. That's something to do. What can this be a differentiator we can make in our business? I think a client compliance officer is often somebody who's needed, or that role. Who is that role? Who's responsible for that? Is something companies need to look for. And you need to be active in this area. And really not look at current events and making it more realistic and trying to get the attention of people. And again, going back to tone at the top is so critical. Tone at the top is just, if people believe the management is critical, the management focus on this, they'll fall in line. If they think management doesn't really matter, won't affect them, doesn't affect their annual review or their bonuses, they won't make this a big effort.
Peter, unfortunately, we are near the end of our time for this episode. But before we leave, I wanted to ask you if our listeners want to connect with you, find out more information about your practice, or obtain the article that we referenced in this podcast, what would be the best place or places for them to go?
Well, I think this is all connected to my LinkedIn profile. This will all be there. Make sure that this podcast as well, if that's permitted, I'll have
You
that.
bet.
And again, the article I wrote was with FTI. That's on the FTI site. I think it's in your invitation. So I'll make sure that's connected as well.
So we're going to put both of those in the show notes, Peter. I wanted to thank you. I'm sorry it took so long to get you on, but I hope we can continue this conversation down the road.
Yeah, and let me know if there's any other information you need. I appreciate it. It was hopefully this is a value to your listeners.
It certainly has been, because it's been of value to me.
Thank you.
Compliance Podcast Network. Start your mornings with daily compliance news, quick, sharp updates on the top compliance and ethics stories in under 5 minutes every morning in Compliance Podcast Network. Because compliance never sleeps. Need practical advice fast? Check out Compliance Tip of the Day. One actionable idea to level up your program. Short and sweet, every day on Compliance Podcast Network. Got 10 minutes? We've got the week's top 10 stories. 10 for 10 brings you the big compliance headlines. Fast, fun, and focused. Every Saturday on Compliance Podcast Network. And don't miss the Sunday Book Review, where compliance meets culture through must-read books and big ideas every Sunday in Compliance Podcast Network. Whether you're in the office, on a walk, or commuting, stay smart, stay ethical, stay tuned. Only on the Compliance Podcast Network. Available wherever you listen to podcasts.